Probably been seeing this one blown up online. Fannie Mae removed the minimum credit score for conventional loans. And yeah, that headline is technically true, but it leaves out some really important details. Let's talk about what actually changed and why it doesn't mean what you probably think it does. So here's what actually changed in the system. Fannie Mae's automated system is known as Desktop Underwriter. It's an automated approval system that loan officers can use to decide if you're going to be eligible for a loan. It will no longer automatically block you just for being under a 620 score. Instead, DU looks at your whole file, which is your credit history, debts, down payment, reserves, income, assets, all this fun stuff, and decides if a loan is an approve eligible or not. That approve eligible is key. It's what I need to approve you for a loan. DU has always worked in this way. It's just that now they're taking away the floor credit score. But here's what didn't change. You still need that DU approval. There is no automatic yes just because DU will now ignore lower scores. Ask any loan officer how often they get an approval when scores are approaching 620 already. The answer is pretty seldom. It's actually really difficult unless they're putting down a whole lot of money and they have very high income. The other issue is, let's say we get you approved with less than 20% down and DU gives me an approved eligible with your score being under 620. You still need private mortgage insurance on a conventional loan. And most mortgage insurance companies price much higher at lower credit scores, insanely higher, with some still keeping a 620 as a minimum on many programs. Translation, it can either get really expensive or I'm not even going to be able to find that policy for that particular loan, which means we still can't do it. When pricing gets expensive, your APR climbs, and we still have to pass high cost and QM tests. No one's skipping federal rules on cost of loan. So what if your score is under 620? In a lot of cases, FHA still makes a whole lot more sense, and this is the route we'll typically go in this scenario. So for me, this announcement changes almost nothing. On FHA, down to a 580 score, you can still do 3.5% down. The rate is going to be a little bit better at 500 as compared to conventional letters. At 500 to 579 scores, typically going to need 10% down and a manual underwrite. Now here's the kicker. FHA mortgage insurance is way cheaper than conventional PMI when you have a lower credit score. If you have super high credit scores, conventional mortgage insurance is cheaper, but anything below that 720 range, FHA is going to win out 9 times out of 10. Bottom line, the headline is no hard 620 floor. Not everyone under a 620 gets a conventional loan. If your score is on the lower side, we'll run the numbers both ways, conventional versus FHA, and pick the one that gives you the best payment and best chance to close. You're hearing the buzz about no minimum score and thinking about going through with it? Send me your scenario. I'll run DU if we have an application. I'll price the PMI. I'll compare FHA and conventional and show you exactly which route saves you the most money. I do home loans in Arizona, Oregon, and Washington, and I am more than happy to help you out.